everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Market Outlook, where we take a look at the big six markets that we trade, and that's going to be the Bund, the Euro, Gold, the Bonds, Crude Oil, and the S&P 500. And we look to formulate an attack method for tomorrow's trading with as much information as the market wants to give us. Now, today was FOMC day. They ended up staying on that 1% rate. The market didn't really seem to react a whole lot. It kind of seemed like they had everything sort of priced in, and I'm pretty sure everybody was kind of anticipating that was going to be the one. It was a unanimous vote, so wasn't really much of a surprise there. Now, before we jump on into the charts, as always, make sure to swing on over to the website, scroll down, and click on the Daily Outlook newsletter. That's going to sign you up on our email list so that you'll know every single time one of these videos comes out. And along with that, we talk about different stocks, different Forex markets, different cryptocurrencies, different statistics, all kinds of cool stuff. So a great newsletter to get your hands on. Along with that, every single morning at the bottom of the page, we post a market psychology video where we rip apart the psychology behind the market to figure out as much as we can, learn as much as we can from the markets so we can be a better trader for the next day. And then we also post our morning live trade room prep levels, and that's going to be the major levels of support and resistance for the big six markets that we trade. Now, if you haven't done so already, make sure to go in and click on the live trade room subscription and trial info, and that will give you the opportunity to sign up for a one-day trial to see what we're all about. If you like it, you can always sign up for a weekly or monthly subscription. And of course, if you join as a VIP full-fledged member, you get the live trade room as part of the package, so you never have to worry about spending anything ever again. Now, first of all, looking at the Bunds really didn't do a whole lot. Today was mostly sideways, range high at about 161.93, down to the low 161.68. Just towards the end of the day, started to break down a little bit, showing that the sellers may want to try to take some control here. But if we zoom out, we can see we really haven't gone very far. We're pretty much in yesterday, and honestly pretty much in the day before that, and we really haven't gone anywhere outside of there. So overall, the bears do own control. We had a big gap down on the French elections, and we haven't really looked back, but well, we're not really moving either. So the overall downward bias that we have right now, there is a downside objective for the sellers, and that's going to be at 161.49. We also have minor support at 161.52, which is definitely something to keep your eyes on. Overall, though, you know, we know what to do with a range, right? Buy low, sell high, stay out of the middle. And right now, in this range that we had earlier this morning, technically we're pretty low, so it's going to be really hard to want to be a continued buyer until we get down to that objective at 161.49, and then from there looking to kind of switch gears and go right back up towards the top side as a buyer. Now, for the Euro had a pretty good downside move, a little bit of chop and slop, and then the FOMC kicked in and kind of finished the job off to the downside. Looked like they finished off the bottom of a wedge as well down here, a little bit of exhaustion, and once they broke down underneath that level of support, they popped back above it, used it as support once again, and are now attempting to turn higher. So this area, definitely a location where, at the very least, a lot of profit taking is taking place for the buyers, the sellers coming in as buyers. But the problem for the sellers is there's not really much room to continue any lower. The sellers are going to be looking for a much better price, and right now, I mean, being only a few ticks away from an area of support, not exactly the location that you want to be looking for to jump on in with a big sell order. So a lot of traders probably waiting for a better price, and that's going to be at 109.190, 9,200 in that area. And if they really want to be generous on that, coming back to retest the earlier range lows as resistance for 93.16. So still looking to be a seller, definitely. That hasn't changed, but waiting for a slightly better price. We're pretty close to an area of support, and I really don't want to try to drive the market through that. On gold, gold kind of fell apart. We're finally breaking out and getting continuation of that leg that we had previously back on the first. That leg on the first drove down, we went into a range for a little while, and now we're breaking down again. And with that heavy breakdown, that left a major open objective to the downside at 37.9, which actually just hit on this most recent 5-minute candle. And now we're kind of out of the way in terms of selling objectives. Now, that by no means it shows us that we should stop selling. This is a very bearish market. But instead, what it tells us to do is maybe don't sell so low anymore. We have a reason to be a seller. That's pretty obvious given the overall trend. But the important thing here is waiting for a slightly better price. Now that major objectives are out of the way, a lot of traders are going to be looking for, well, to take profit. And with profit taking comes a profit taking rally. So with that rally coming up, the overall momentum likely going to find an area of resistance a little bit further up, and that could be as high as 45.4, but I wouldn't mind seeing it down at around 43.5. That whole area is a very nice area of possible just resistance where the sellers may want to reload and drive the market back down again. Now, keep in mind, depending on how aggressive the sellers want to be here, this could only just bounce up for one candle and then slam lower for another 100 points. We don't know. So being a little bit aggressive right now, I think the aggression is kind of over with, or at least nearing the end. I would rather look for at least somewhat of a pullback. And again, anywhere between 42 to 43, even up to 44 would be a nice area for that possible early selling. And the best potential area to sell would be if we can make it all the way back up and retest this earlier low that we broke out of, come back to retest it and find resistance from that point, and that also lines up with monthly resistance at the same location. So that's kind of the hot spot, but chances are we're probably not going to get that far up given how bearish this has been. Over on the bonds, yeah, well, the move down really isn't giving us a whole lot of sentiment. We obviously are in bear mode, but for the most part, we're not really getting a whole lot going on here. We have the low side being tested just recently, and we're breaking out of this earlier range, but the bonds have just been such a mess lately that, we have to assume that we're probably going to stay in a range. They tried breaking out of the highs, it failed. Tried breaking out of the lows, failed. They missed the high. And a lot of times from that point on, they'll make two legs down before they start looking to correct back up. So I am looking for one more leg to the downside to finish off this bear move, and then looking to switch gears and push it right back up towards the highs. So short-term seller, long-term buyer, depending on how they want to form that structure kind of movement. And then we've got crude oil. Now, crude oil really didn't go anywhere today. I mean, all things considered, it's inventory day. We had a lot of stuff going on for crude, and it really didn't do a whole lot. Now, it did come out as a slight surprise number. It appeared as though a lot of the API and the inventories were both forecasting a negative number, and it did come out negative, but it came out much less than expected. They were forecasting anywhere between a 2 and 3 million, even going up onto that 4 million mark, and it came out just under 1 million. So it took people a little bit by surprise, and if they were building in the buy side here, chances are they realized, oh, wait a minute, that was a little bit worse than we thought it was going to be. It's going to be bullish, right? Fundamentally speaking, when you have less inventory, it should be bullish. Price should increase. But if they were trying to build into that price and assume that move, assuming that the forecast was correct and they were wrong, well, they dumped their positions because they know that they can now get a better price. Fundamentally speaking, that prop that they were doing up here, propping the market up, doesn't make any sense now because, well, it was worse than they thought it was going to be, and that caused a bit of a drop lower. They did end up finding a huge amount of support at the prior low of day, as well as 60-minute support at 47.41, and that area is the hot spot. It seems like we're kind of forming a little bit of a range inside here. High side at 48, low side at 47.41. We're just kind of looking to play both sides of it. Now, when it comes to a range, generally speaking, we're looking for the overall bias, right? What happened before we came into the range? Was it a move down into a range? Was it a move up, etc.? In this case, we had a move down, aggressive breakout to the downside. They came right back up into that area of resistance and rolled back over towards those lows. So right now, we have a bearish bias, right? We moved down into the range. So the assumed range that we have right now is just looking for some selling pressure, and we want to find selling near the highs. Right now, we're in the bottom quarter or so, not necessarily the place that you want to look to jump into a new trade. So at the moment, crude oil kind of on a holding pattern here, waiting for a better price, and that could be up at 48 and maybe a little bit higher to retest to 48.20. But either way, not really a good sell down here. We need to wait for a little bit of a better price before we go jumping on in. And then we've got the S&P. The S&P really didn't accomplish much either. We had a lot of back and forth this morning, understandably so, with FOMC around the corner. Just in case it's a surprise number, a lot of traders will sit on the sidelines and wait for that to go through. And it appears as though, well, they weren't really shocked by what happened, and they just cycled through the range. Now, again, we want to know the overall bias of the range, and the bias of the range is range, right? If we zoom out a little bit further, we can see that the overall bias of this range that's been going on for several days now, back into April, is bullish. We rose up into this area and then started ranging out. But the problem is, we've been stuck in this range for so long that bias begins to get weaker and weaker and weaker. The overall sentiment from the buyers, well, if they wanted it, why are we still in this range for this long, right? Why haven't they been able to show up? So they do still have the overall bias, but it's not as strong as it used to be, right? They're kind of losing their grip a little bit. So overall, we're looking to trade this like a range: buy low, sell high, stay out of the middle. Right now we're high, and given that the overall sentiment is kind of waning a little bit with the buyers losing grip, given the amount of time going by, we can likely get away with trading both sides of the market. So that's what we're going to be looking for going into tomorrow in the S&P, is just looking to play both sides with a very slight bullish bias. So that's going to do it for the Outlook video. Looking at the news calendar for tomorrow, we've got another one of those days. It's a Japanese holiday again tomorrow, and that's going to be Greenery Day, so that's all day. So the banks in Japan will be closed, and that will have a little bit of an impact on the markets. At 4:30 Eastern tomorrow morning, we have the services PMI out of the UK. 54.5 is the forecast. Previous is 55 even. And then there's no U.S. news, right? There's no U.S. news, big news, to worry about tomorrow, and that can cause a little bit of a headache. The markets may be really slow while they digest all the FOMC information coming in. Now, at 12:30, we do have ECB President Draghi speaking, which can have a pretty big impact. Draghi usually throws the markets around, but the problem is it doesn't happen until 12:30. So we've got to wait once again until lunchtime hits before we can potentially start seeing some movement. So tomorrow might be a little bit of a grindy one. You got to play it safe. At 16:25 tomorrow afternoon, out of Canada, we have the Bank of Canada Governor Paulos speaks, and that's really it. That's all we've got for the news calendar tomorrow in terms of big announcements. There's, small ones all over the place as per the usual, but the big ones, well, we've got a holiday, and outside of the U.S. events, nothing inside the U.S., which could cause tomorrow to be a little bit of a chop fest. So that's going to do it for this one. Like we always say, even if it is slow, make a plan, trade the plan, follow those rules, and you should be A-okay. Until next time, we'll talk to y'all later.